Good afternoon. This afternoon we're going to talk about Texas rural land markets. And as you know, the Texas land market is very diverse. The resources that you find across the state are highly variable. And so talking about one land market for everything is kind of a little bit of a stretch. So when we say we're talking about in the headline here, buyers have vanished, well, we'll find out that the numbers show that looks like it could be true for one particular region. Other regions are weathering the storm a little bit better. So without further ado, let's get started. At the beginning, we're going to look at the economic environment that the COVID virus has cursed us with or blessed us with, however you want to say it, because land markets are basically the prisoners of the economic environment in which they exist. And here's a chart that shows the real gross domestic product percentage change from one year to year change. And you can see the second quarter number has just come out, and it is unprecedented in the depth that it has fallen. There hasn't been a drop-off like that since they've been reporting these numbers that I'm aware of. So we had essentially a cessation of economic activity that is unprecedented. And if we go to the next slide, one of the important influences on Texas land markets are the crude oil prices. Here we had not only in the second quarter the COVID virus effect, but we also had some shenanigans internationally with the land market, which resulted in a negative price for oil at one point in May, which was again an unprecedented happening. So it's an amazing development to have a negative oil price. And go to the next slide. This shows the consumer confidence index. And the reason that consumer confidence index is important is because consumers drive most of that GDP growth. When consumers are feeling flush and confident about the future, they spend money. When they are fearful about the future, they don't. And that has a very negative impact on what's going on in the economy. So this shows, the blue line shows the U.S. Consumer Confidence Index. The red one shows the Texas Consumer Confidence Index. And you can see that right-hand side of this again is just an amazing drop in the second quarter. And at the tail end, it's trying to struggle back. But even the Texas one, again, turned down in the latest numbers that we had. So the economy was hammered pretty hard. And why do we spend a little time talking about that? Well, let's go to the next slide. We've done research here at the Real Estate Center that has demonstrated to us that we can explain Texas rural land prices with a combination of variables. One of them is personal income growth. We didn't show you the second quarter number on personal income growth because the federal government doesn't get that statistic, make it available until almost the beginning of the next quarter. But that's why we looked at GDP to give you an idea of what might have happened to personal income. The Fed funds rate also impacts the market. What happened last year, four quarters ago, is coming home to roost now. And the Fed funds rate at that point was increasing. So we have some increases to face for a quarter or so before the declines that set in when the Fed started cutting rates as the coronavirus came online. The oil futures traders see prices healing a little bit, but at a lower level. And the consumers are recovering, possibly, but they're not going great guns. So we're in essentially kind of a dicey economic environment that we're looking at. And so many economists now are guessing at what's going to happen. It all depends on when we get the coronavirus under control. I think most folks last spring had assumed that by this time we would have it under some semblance of control. And since that hasn't happened, now people are reassessing the situation. So we need to keep our eyes peeled as we go into the third and fourth quarter. So now let's look at what this did to Texas rural land markets. This shows the map of the markets the way we delineate them here at the Real Estate Center. We have 7 different regions, and we look at each one of those individually. The results of those individual estimates are then the basis for that statewide number that we looked at earlier. So this is the chart of the statewide numbers. It shows the red line shows the nominal price per acre, which is the price that people pay for land. The blue line is that number adjusted for changes in inflation or the purchasing power of a dollar to adjust it back to 1966 prices. That's just designed to show you where prices are currently relative to where they were historically. And if you look on the right-hand side, the second quarter number there is the highest price in real terms that we have had in Texas. Now you can see there's a little dip there in 2009 that following the little economic difficulties we had there. But for the most part, since the year 2000, we've been off to the races here in terms of price increases in Texas rural land. On the right-hand side of that chart in the red line, you can see the last 2 numbers are basically pretty much equal. So the second quarter number is almost the same as the first quarter number. Next slide. This slide shows the total dollar volume. The total dollar volume is basically a calculation of the price per acre times the total acreage that was involved in the market in any given quarter. And so it's a measure of all of the activity that goes on in that particular time period. Now, as you can see, in around, I believe it's somewhere around 2005, 2006, that number started to go down. And when that number goes down repeatedly and then has dramatic drops like it did in 2008 and so forth, generally there is what is charitably called a repricing of the asset, which is basically declining prices. Prices don't decline first. The market activity starts waning in the first place. So we look not only at the price per acre here, we look at this indicator, total dollar volume, and we look at the volume of activity, numbers of sales and acreage and so forth. And you can see the second quarter number was dramatically lower than the first quarter number and the ending the third and fourth quarter of last year. So it's not a panic signal, but it's a signal that you need to be watching what's going on as we proceed. So let's look at the next slide, which just puts it in numbers. These are the percentage changes that we're looking at for the second quarter. Prices went up 1.7% on a statewide basis. The sales volume was off 8.7%. The average acreage was up about 9.1%, which basically suggests that larger properties sold statewide. The total acres were down to almost 24%, and the total dollar volume was down 22.2%. So this is not what you would call a stellar performance, but when we dive beneath the surface and look at some of the regional results, we'll see that there was a mixed bag, if you will, of news going on. So next slide. Prices grew in at least two regions noticeably. Actually, there are several others where prices were up as well, but the growth was a little muted. The higher prices drove those the dollar volume increase in the one market where the total dollar volume did go up, and we'll talk about that when we get to it. And but markets in the second half of the year, I would say, are beset by uncertainty because of the economic environment and what we see in the development of some of these numbers. So let's go to the next slide. This is we're going to be looking at the Panhandle and South Plains, which is that region number 1 on this chart. And it's up there on the northwest corner of Texas. It is arguably the region that is most dominated by agriculture of all of the 7 regions. And I'm told that there was more grassland that sold in that area this past year, which might explain some of the numbers that we're going to look at. Next slide. This shows the price per acre. Again, the red is nominal price per acre, and the blue is the real price per acre. But you can see the last couple of quarters, prices have receded from the preceding quarters, and actually, when we look at it in a few minutes, we're going to see that they also receded from last year. Let's look at the total dollar volume on this one. Here's the total dollar volume. It's still at a pretty high level compared to historical levels, but the thing that is kind of causes you to do a double take and maybe keep watch on this is that right-hand side for 3 quarters, the trend has been down. And next slide. Recall that the Panhandle and South Plains are dominated by agricultural uses, and think about what happened with commodity prices. Cotton, corn, cattle, everything that is produced up in that area, prices have been pretty weak since about 2014-15. So it probably wouldn't be too outrageous to see those prices retreat a little bit, and they certainly did in the second quarter. They're down 5.9% from the year earlier. The sales volume is off 16.5. The average acreage is off 11.6. Total acres sold were down 16.9, and the total dollar volume was off 21.8%, which led me to kind of characterize this as caught in the storm with a question mark, because they're not really, in my mind, horrible numbers, but they're not really good numbers either. So this, going forward, we'll bear watching to see if we have some recovery in the third and fourth quarters. And next slide. Now this is far west Texas. This area is what we refer to as an extremely thin market. There's a lot of country out there and not many people and not much activity compared to what goes on in the other regions of the state. Recently, most of the activity, or an awful lot of it, out in that region has been driven by the industrial demand that was derived from all of the activity in the Permian Basin in the oil patch. So next slide. This shows the price trends out there, and you can see they're a little bit less well behaved because of the thinness of that market. But I just wanted to point a couple of things out, or one thing out specifically. That big increase and the peak, if you will, of prices out there occurred when there was almost a frenzy buying ranches to put in sand mines to provide sand for fracking oil wells in the Permian. And also it was partially driven as well by people buying land to put in water well fields to supply water for fracking operations. So that was the peak out there when the median price in that region got to be more than $1,000 an acre. As you can see, back in 2010, and so it was around $300 an acre. So that was a big change. Once the appetite for sand mines was satisfied, those buyers disappeared and the prices started to recede a little bit. And you can see the latest quarter, they went down substantially. Next slide. Also, you can see that the total dollar volume went down precipitously in the second quarter after going down a little bit in the first quarter. If we switch now over to the next slide, we can see some pretty staggering numbers. And this is the place that when oil went to a negative price, all of a sudden those oil buyers out there disappeared. There just were nobody in that market was interested in purchasing, to the point that there was I believe it was a 62,000 acre ranch that was going to close. That deal fell through. And most recently there was a property out in that region that sold for somewhere in the neighborhood of $325, $28 an acre. That was originally listed for $675 and was on the market for 3 years, owned by an oil company that needed to raise some cash, and so they finally sold it for a lot less than they had started asking. But one of the things about the price indicator here is that there is such a small volume of activity out there that it's not considered a real stable indicator of the prices in that area. But the rest of the story is those sales volumes numbers are pretty staggering. So things just have kind of come to a screeching halt, if you will, in West Texas. And when I get numbers like this, it causes me great pain and consternation. And so I don't just take them at face value. I ended up calling on some of my acquaintances out in that region to ask them what they were seeing, and telling them that the numbers looked pretty sobering. And they basically confirmed what we're seeing here, that there hasn't been much activity out there in the second quarter. So next slide. Now we're going to switch a little bit and go to West Texas, which is just neighboring the far West Texas. And if we look at this price chart, the next slide please, we can see the right-hand side, the second quarter price is maybe up a little bit from the first quarter, but it's up from last year. And next slide with the total dollar volume. There is a little bit of a downtick in the last 2 quarters, but they're still up there in a respectable range. And let's look at the final numbers on this. to make us feel a little bit better about what went on, what we saw out in the Permian, far West Texas area. In this West Texas area, we see the price is up substantially, 12.2%, which is a pretty good increase. Sales volume, again, we're looking at negative numbers. This is the number of sales. We're off about 12.6%. The average acreage was down, so it was smaller properties selling, but it's not much of a percentage drop, 5.6. Total acres were off 4.9, which is not much either. The total dollar volume in this region was up 6.7%. Now, just a couple of things about that. The plus 6.7% relates back to the second quarter of 2019, which was unusually low. So even though it's positive, it's not as positive an indicator as you might think. It's for that reason that we have all of these negative volume and acreage indicators. I've classified the performance here as a mixed performance. The price is strong. Now, in the past, when we have seen something like this happen with a strong increase in the price and negative indicators in the volume, it's an indicator that the property that did sell was premium quality. So we'll have to keep our eye on West Texas and see what happens in the succeeding quarters as we go on from here throughout the rest of the year. Now, Northeast Texas, we're going to jump over to the Louisiana border to west of Fort Worth and look at what happened in that market. This market, of course, is really heavily influenced by the presence of Dallas and Fort Worth in the region. This region was the last one to go into the tank in 2009, and it was also the last one to recover after that recession that we had in 2009, 2008, 2009. But since that recovery, it's been doing well. So let's look at the next slide. This is the price slide, and you can see that there has been a sustained upward trend in prices in this region. But when you get over on the right-hand side of that red line, the quarter-to-quarter comparison, the first and second quarters look pretty flat. So the second quarter price was about even with the first quarter price. Next slide, please. This shows the total dollar volume in the Northeast Texas region. There is a decline there in the second quarter, but it's not anything that's really pronounced. And until then, we were looking at increases going on. So let's look at the next slide. The price is up 5% in this region. Sales volume was off. Again, it was off about 10.8%. The average acreage was up 5.5%. We're looking at total acres down 15.7, and total dollar volume at 11.5 down. So we're looking at negatives on the volume indicators, even though the price stayed up. On balance, given the fact that we've been faced with all of the cessation of economic activity associated with the coronavirus, I would say that this region had weathered the storm rather well. So now let's move on to the Gulf Coast and Brazos Bottom, that region number 5 on the statewide map here. Again, we're seeing a recurring theme as we go to the next slide, which shows the prices of the second quarter of 2020 being pretty much equal to the first quarter in terms of price. And the obvious basically the upward trend has flattened out on this particular chart. And go to the next slide. Again, we're seeing some decline in the total dollar volume, but again, as with the region number 4, it's not a pronounced decline. It looks reasonable given the situation that we were in economically. So let's go to the next slide and look at the results here. Price 3.9%. That's beginning to be a little weak. Sales volume, again, we're looking at negative numbers in those volume indicators, but down at the bottom, the total dollar volume is down 6.6%. That's not a tremendous drop, so again, I would say that region had weathered the storm rather well. So then let's go on and move on to South Texas, which was dominated for a while by the Eagle Ford shale development down there. After the Permian got such an advantage over the Eagle Ford wasn't as attractive, and so that activity waned quite a lot. So let's go to the price. But even given that, we see that region has experienced basically pretty much a solid upward trend with a couple of little bubbly looking wrinkles in the line. And we're looking at, after that first big bubble, we're looking at after the Eagle Ford play was so hot, and it still is looking rather strong. Let's go to the next slide. Here we're looking at just a 1/4 drop in the total dollar volume. So if we go to the numbers and look at the price, the next slide shows that the price was up 2%. The sales volume was off about 27.2%, and the total dollar volume is down 17.7%, and total acres were off 19.3%. And the average acres picked up to 9.1 or 9.1%. So I would label this proceed with caution because it's been a little weak down there, and it had just begun to recover, and so this is another cautionary, maybe a blinking yellow light, not a blinking red one, but stay tuned for what happens there in the 3rd and 4th quarter. Region number 7, the Austin-Waco Hill Country, the center part of the state, which is probably the premier location that recreational users are looking for property, and they have the prices to show that. So let's go to the next slide. This shows what's been going on. There's been a general upward trend in prices since 2010, and but a little bit of a leveling off out there in the last couple of quarters. Let's go to the total dollar volume. Again, a little bit of a drop in total dollar volume, but nothing dramatic. If you would go to the next slide. The price was pretty flat, even considering or compared to a year ago, at 1.5% increase. But the sales volume was up here. And this is the one region where the sales volume was up. The average acreage was up, well, pretty much flat, 0.2% is almost no change. The acreage is almost no change at 0.7% decline. And the total dollar volume was up 0.8%. So this is another area that I had characterized as weathering the storm, given all of the negative headwinds that it was facing in the second quarter. It's pretty amazing that these numbers have come out as good as they have. Now, the past, when this thing set in March and April and May, speaking with brokers across the state, one of the recurring themes that you heard were deals that were falling through, deals that were being canceled, things that were supposed to close that weren't, and so forth. So there was every reason to believe that we're going to see a big decline in volume of activity across the board. On balance, it looks like the sellers, or the buyers have vanished in large part out in that Trans-Pecos country. They're in the second quarter. So let's think about what's going to happen in the third quarter. One of the things that I've heard repeatedly is that people want to get out of the cities. The virus is inspiring a movement to the suburbs. Well, the brokers that I've been speaking to lately have all noted that they have a high volume of calls. Their phones are ringing off the hook with people that are not just inspired to move to the suburbs. They want to get a place way out in the country away from everything. So the indicators are that there may not have been a lot of activity in the second quarter, but we may want to hold on to our hats to see what happens in the third quarter. Another indicator we just got the other day here, they keep track of how many hits we get on the different parts of our website, and looking at the real estate rural land activity in the last month, it was up 63%. So we're looking at a market that was kind of quiet in the second quarter, and in some places was probably comatose, almost in the second quarter, but where things may be looking up as we go forward. So I would encourage you to keep your eye on the developments as they go on, and to do that, you can go to our website. The first URL up here will take you straight to the rural land data, which shows we post our numbers quarterly, and by the end of the week we'll have the second quarter of 2020 posted out there, and by the end of October we should have the third quarter ready for you. And the bottom contact point is my email. You can send me an email with questions whenever they arise. So next slide. That pretty much ends our tour of Texas and what happened in the Texas land prices or land markets this second quarter. The coronavirus was enough to frighten almost everyone. I would say that looking at most of the state, we have survived it pretty well up to this point. So now we just have to keep our eyes on the developments and see what happens in the next couple of quarters. Okay, we do have a question. Do you feel that future purchases will lean toward larger or smaller acreages? Well, there is a economic pressure to break up properties and sell them smaller properties, because more people can afford smaller properties. So the market is bigger for those, and the prices are generally higher. And that has been a trend that has been essentially afoot since 1966, since I've been, I started doing the land studies in 1983, and it's been with us since then. And I presume that it will continue, because there is more population here looking for opportunities to get out into the country. So they're going to be looking for properties that they can afford, and their budgets are going to dictate that they buy smaller places. So I would think that as we go in the future, in most places around the state, the trend would be to smaller properties, smaller acreages.